Clear signals don't come. If you're waiting for a clear signal, you're not going to get that for a long time. Let me just take you back. So every month I cover a different myth from my book Debunkery, showing why some piece of conventional mythological type wisdom is wrong. And one is, don't buy in until there's clarity that you're in a bull market. This is wrong for so many reasons. And in my book Debunkery, in chapter 9, I cover them. I'm going to cover them briefly right here and right now. The biggest single reason is there's never clarity. Clarity in the stock market is always very expensive to buy. When you think everything's clear, it actually means it's risky. The normal way bear markets end and turn into a bull market is in either a V-shaped pattern, steep decline followed by a steep ascent, or in a W-shaped pattern with two bottoms. But when you actually come off the bottom, the initial first few weeks of the new bull market ascend at about the same rate as the last few weeks of the descent, and percentage-wise are huge. And getting out and then waiting for that clear period virtually guarantees, if not guarantees, that you miss that up leg, so you've locked in the loss that made you most afraid and caused you to get out in the first place. Locking in the loss before that ascent is just about the worst thing you can possibly do to yourself. Secondarily, and I've written about this at some length, there is this thing that I call the pessimism of disbelief, which I also wrote about in Debunkery, my book on myths, that as that bull market begins, people become more pessimistic, not more optimistic. It's not what people expect. Therefore, as the market goes up, there's more and more evidence thrown at you that you should be afraid and that there isn't clarity, that it should go back down again, that it should go back down and hit new all-time lows that it doesn't do. The first months of bull markets, as you ratchet up most of the prior decline off that steep bottom, you actually find ever more voices always arguing that you haven't hit the lows yet. So you don't get that clear signal. Clear signals don't come. If you're waiting for a clear signal, you're not going to get that for a long time. Let me just take you back to the COVID bear market. As the market ratcheted up off of its March lows, the fastest steep bear market in history, tied to the lockdowns associated with COVID. People kept saying, which is normal, there's too many things to go wrong for the stocks to keep going up. The stock market isn't reflecting reality, but it did keep going up. And if you waited for that all clear sign, you actually got to all-time highs before you ever got an all clear signal. That's a lot to lose. Take, by contrast, the great bear market of 2007, 8, 9. People kept looking for new lows for several years after the March 2009 bottom. And there was continued view that all of the good things that were happening that were surprising people would morph and turn into bad. What is that? Again, a lack of that clarity. So what I want you to see is the further down the stock market goes, the more you should want to own it. This is a point that's counterintuitive. You know, if you think of this in a different way, the time to buy something from a retailer is when they have it on steep sale, not when they don't. And with stocks, it's just the reverse. The lower the price goes, the more people don't want to own it when it's actually the time that they should own it. And it's very hard for people in liquid securities to get that in their bones. But the risk is the least when the fear is the highest. And sometimes you just have to sit there and say to yourself, I'm going to hold my nose and I'm not going to pay attention to all the nonsense I hear around me. Prices are down a lot, so therefore I know risk is here at hand, and I'm going to just take advantage of that and not really pay attention to what the next few months have in store. The fact is, waiting for an all clear sign is waiting for expensive costs to nail you by locking in losses that you don't need while missing the upside that comes from the beginning of a bull market. Thank you for listening to me. I very much hope you enjoyed this video as part of my series on debunking common market myths. To watch more videos like this, click the link on the screen and make sure to subscribe to Fisher Investments' YouTube channel. Thanks so much for listening to me.